Okay, good afternoon, everybody. Welcome to Friday's weekly take on the market. Today is April 19th. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. Can't tell you what to buy, sell, hold, how many stocks you should own, whether you should keep your NVIDIA because your cost basis is 32 cents, et cetera, et cetera. Okay, so we'll go through overall market thoughts. We'll do industry group, stocks to watch. We'll do the same drill as normal. And I apologize about last Friday. I was really under the weather, still a little bit under the weather, honestly. But I just could not muster the energy to do a video last Friday. I know there was a lot of volatility, and I really hemmed and hawed about I wanted to do one because I felt like it was, kind of an inflection point for the market, which it turned out to be. The market was kind of at a make or break point, and it broke. So hopefully you had your stops in place, your plan in place, and your protection mode. And if not, if you're more of a long-term holder, these are the waves you've got to ride. Unfortunately, I'm not very good at them, which is why I tend to get out. Sometimes to my detriment, honestly, and sometimes it helps me. So we'll talk about the overall market, and I appreciate all the well wishes last on that as far as the video. So okay, so the indexes. Let's talk about that a little bit. Or you know what? Let's go to the very first slide that I want to talk about. So I had this slide last week, and Investors Intelligence was pretty bullish. Like the sentiment was skewed to the upside. Now it's not a great indicator timely wise, but it should raise your antennas a little bit and just have you kind of on the watch. It works very well the other way. So as this sell-off, if it starts to get worse and worse, this will be something that I'll use to try to catch a turning point, inflection point, with some type of risk reward trade to the upside. We'll have to see how the numbers play out. But people were getting pretty bullish, and you had animal spirits in AI, animal spirits in crypto. What else was kind of going crazy? And the thing that and it's always easier in hindsight, but the crypto stocks topped a couple of weeks ago. NVIDIA, SMCI topped a few weeks ago. Cybersecurity stocks topped, especially like Zscaler and some of the others, Palo Alto. They topped, much longer ago. So that's why it's so important to watch the leadership, because even though the market was barely off the highs, you were getting a lot of churning underneath with the leaders. The leaders they looked like, at least temporarily, best case scenario, they needed to build a base. Worst case is they topped, and we'll have to wait and see. The jury is still out. I don't know if this is the start of a bear market. It's definitely, correction. We'll have to it's just so much easier to call it after the fact, but it's definitely a correction if you want to use that term. Okay, so let's open up the charts. I'm going to turn my camera off so you can see the charts a little bit better, just in case. And here's a chart of the NASDAQ. And what happens a lot is when it goes down a number of days in a row and there's no bounce, like a lot of people are in there waiting for a bounce to do some liquidating, and it just doesn't occur. And even though it's hard to see on this chart, a couple of these highs in here, like there and there, those were in the morning. Like the market would open higher and then just kind of roll over after that. So you have a lot of distribution in here, and then it becomes a little more obvious, and then now it became like a trap door. Now, how it plays out from here, I don't know. If this is ultimately a bear market, what will happen is you will get some kind of bounce, into this moving average as this moving average starts to roll over, and then another leg lower. So I think, you know, if you're considering shorting, it's probably you're probably a day or two too late. Even though you might get some weakness on Monday, ideally we do get weakness. That would be best to get a little flush out. But if you I'm looking ideally, that would be like a perfect setup for the short side, is like a weak rally if that were to happen. I don't know. I'm 95% on the sidelines in cash. I've got one short position that I just have had and just kind of, you know, refused to let go of so far. So, and then the other thing is the weakness is in the NASDAQ, which is a bad sign for the R style. And you've noticed it in the last few days where the Dow would be up and the NASDAQ would be down, or the Dow would be up 0.9% and the NASDAQ would be up 0.2%. I saw that a lot, especially on the opens. The NASDAQ was not as strong as the other indexes. It should be stronger. It's a bad sign for our style. Where would they hide? If you have to be fully invested regardless, where's the best place to hide? It's not the Nvidias and SMCIs of the world. It's Eli Lilly or Merck or something of that nature in the Johnson and Johnson Dow type stocks. So you've noted, yeah, I've noticed that last few days, it's kind of a bit of a tell. So the Dow is off. Let's see how far below the 50-day it is. It's 2% off below the 50-day. The S&P is 3% off the 50-day. And the NASDAQ is, what's that, about almost 5% off the 50-day. So you really want the outperformance to be in the NASDAQ. When the outperformance is in those, something's wrong. And I think even like the Russell Value ETF, not something that I would trade or even watch. I just saw somebody tweet about it. So the Russell 2000 value was actually up today, while the market, or when I say the market, you know, specifically the NASDAQ, was getting hammered. That's a sign that the money is splashing all over and changing hands. So not the best sign for our type of stocks, the growth stocks. Gold, it's actually holding up really well. So if you have any gold, I think you could probably keep it. This is a nasty daily reversal, and it should have gone lower after that and didn't. It's a pretty good sign. I don't own any gold. I've tried it. The gold is pretty tough, but this has been a good trade so far. Not a lot of eyeballs on it. And I mentioned Bitcoin. So Bitcoin topped, what's that? About 4 weeks ago. 1, 2, 3, 4, 5, 6 weeks ago, Bitcoin topped. And I'll go through some of those stocks like MSTR and Coin, but Bitcoin is a real good proxy for speculation in my humble opinion. And so I watch it because it tells me the animal spirits, the market is willing to speculate. And they stopped speculating in Bitcoin. I know the halvening or the have or whatever they call it is tomorrow. I don't know what that means. I mean, I know what it means, but I don't know what it means for the price. I have any idea whether that means higher or lower. But just the fact that it stopped going up a few weeks ago kind of told you that the market, the animal spirits had kind of dissipated. So we're in a correction. I just don't know if you need to name anything. It's just not a great environment to be long, at least not yet. Now, if maybe in a day or 2 or 3, we could get some type of snapback. It depends on how active a trader you are. If you want to wait for a follow through day or something of that nature, wouldn't fault you for that. To be honest with you, I'm not going to. If the market opened down 2 or 3% on Monday and then Tuesday opened unchanged and started a rally, I'd probably put some exposure on just in case. I'd start to buy some stuff. It's just what I would do. And I'll try a few times with the idea that I might get nicked a few times to catch a big rally. Most of the time that works, not always. And the other thing I've noticed I could talk about is the last few trades have not been working. So as you start to try things, you should notice, is it working? Like I know, and even stocks that I wouldn't trade, but I watch other people trade them, like Coin. I know that a lot of people were tweeting about this day in Coin, which is 411. 411. So, I mean, that looks like and it's supposed to go higher. I know I saw somebody tweet about that, a guy that I follow, he was long Coin, and I was like, oh yeah, that looks like that should go higher. And not only, it didn't even go higher a penny. Look at the very next day. And I noticed that. So I was like, even though I wasn't in Coin, I was like, wow, that's not a really very bullish action. If that stock should go higher and doesn't. And look what happened, right? Because it gets a lot of the short-term traders in there, and you have some weak hands in there. So when it turns pretty bad and rolls right over. How about SMCI? And I'm jumping into the stocks. I apologize, but it's just kind of things that you should observe when you're watching the market. So like this on IB Live on what day is this? So IB Live I was on is that the 16th? Bear with me. I need to. So that was I was on the 17th, which is Wednesday. I think it was this morning. But I had basically said I wouldn't buy SMCI. I felt like the stock was broken. And when I see that, I feel wrong. Like, oh, I don't know, that looks pretty good. That looks like it's supposed to bounce off the 50-day. Now the relative strength is pretty weak and things like that, short term. But that's supposed to bounce. And it tried, at least it tried versus Coin, but then reversed. And then just trapdoored. Really, really bad. That's bad action in that stock. Like that, this stock looks like it needs weeks to months to reset. Like the game is over for SMCI most of the time when you get this type of wide and loose action. So that's it could be a tell for sure for the market. So that's why it's always important to observe this. I think the stocks that you wish you owned is a term that I would use. I always watch those. Which ones do I wish that I owned, and how are they acting? It gives you a good clue on the health of the market. Okay, so let's go back to the slides. And I want to talk a little bit about the market or ways to beat the market. I think in my estimation, look, the US stock market has been one of the great stories in histories of stock markets. The Japanese stock market went sideways for like 30 years or something. Other world markets have they've never even sniffed their all-time highs, but the US market just keeps chugging and chugging along. And most people who've remained with that kind of buy and hold strategy have been rewarded for that. And I've always been a tiny bit on the other side, like, well, what if it doesn't keep doing that? What's going to happen? How do I protect my wealth in something like that? Or especially as I get older, like if you're always fully invested, what happens if we go into a 10-year, sideways market and you need the money right at the trough of that sideways niche market. So it's partly why I prefer to invest in individual stocks, is because I think sometimes we see it in good markets, individual stocks do really, really well. And even as long as the market isn't bad, as long as we're in a bear market, I think there'll be companies doing great things and stocks you can own. It's when the market's really bad that it drives them down. But one of the ways to quote unquote beat the market is downside protection, and it doesn't get as much play as the upside. Everybody wants to beat the market. And In 2020, that was like the biggest thing. People were going crazy on Twitter with guys up 3, 4, 5, 600%. It was like the crazy, impressive numbers for sure. But the protecting and keeping what you have is, I'll tell you, I've had some drawdowns in my life in my account, and it's so hard to get out of those drawdowns. The math is cruel, especially in a taxable account. So this is just a histogram of a couple of, or a handful of years in my Roth IRA. It's cash account, obviously. And in 2019, you know, the market, the pink is, or red is the S&P, and the green is the NASDAQ, and the blue is my account. So in 2019, it did 18%, and the indexes did 30 plus. And it was no fun to underperform the market, but that's partly because the market just kept stair-stepping higher, and I tend to sell into strength. And there was never any of this kind of pullback for me to get positioned stronger than the market to overcome the market. And I'm okay with that. Now, if you're running other people's money, I get it. It's very difficult to explain. You have to really have a trust factor with other people, with the process that you have. And so, but this is my own account. I'm okay with it. 18%. I wish if you could give me 18% every year, I'd spike the football and play golf every afternoon. So 18 is, I'm more than fine with that. Now, it's frustrating for when your peers are doing 40 or whatever. And if you're in that type of environment, which I was in that time frame, I get it. It's different. But for my own money, I'm okay with it. Market did really well. That's fine. It's fine. So the next year was the COVID bull market, which if you protect the downside and participate in the upside, everybody did extremely well. And I made 100% in a cash account, 105. So it's out there. It's there for you. Just by looking, and I didn't even have Tesla. So I messed that one up completely. There was that many stocks to buy. LVGO, which got bought out by Teladoc, C Limited, DocuSign, NVIDIA. I could go on and on. There's a couple of other ones that I did really well. The S&P did 16, and the NASDAQ did 43. So the S&P did 16 because it comes down so hard, and then it comes back. Part of that move of coming up is just filling in the hole. And because I avoided that hole with the rules we have, the market-based rules, I didn't have that hole. And so once the market turned, I was able to start stacking on numbers. And the NASDAQ did extraordinary, 43%. So, but this is what everyone wants to do, including me. I mean, it's what everybody shoots for. But then the next year, the S&P did 28, NASDAQ did 21, I did 25, right in between. And again, I'm fine with that. In fact, that's a pretty good year. I beat the NASDAQ and barely underperformed the S&P. The thing that most people aren't considering is there's like a million risk metrics that you have to consider, and I'm not even including these in my calculation, but I'm rarely 100% invested. It's kind of hard to be 100% invested in a cash account because the money has to come out and it's got to go back in. You have 2-day settlement and all those things. So it's very rare, if ever, am I 100% invested. So if I can do anything near the market, I'm doing it probably on an average during the year of, let's say, 70% invested. I don't know. I'd be really curious. I don't know if I could even find out, but you get the idea. So you're risking less to compete with the market. So that's the other thing you have to consider as well. But really, in 2022 is a standout year in my book because I didn't go down with the market. A really bad bear market. NASDAQ went down 33%. S&P went down 20, and I made 5. I think it was a lot of scratched trades and a really good short sale trade in Tesla contributed to that year using the reverse ETF for a Roth, a TSLQ. I'm just guessing. I haven't dug into it completely, but so this is the other way that you can beat the market is by avoiding that downside. So if you go down 33%, like the NASDAQ did, what does it have to do to get back? Like 50% to get back to even. And so there's more than one way, excuse me, to do this game. I think you can be really uber aggressive and you're always beating the market. And then when the market goes down, you might go down too. So the guys that did 300-400% or something in 2020, I would imagine maybe they went down 10, 12, 15% or something in 2022, maybe a little bit more, but they're willing to do that because their risk tolerances might be a little bit higher than me. So you don't have to always beat the market. It just takes these 2 years alone, when I compare my performance over a long period of time, really catapult my numbers above the average of the S&P. Like in the end, I guess, why are we doing this, right? We want to, if we're investing in individual stocks, we want to do better than the market. But I also like the idea of being able to maybe participate along with the market with less downside, which is really what I think I have, barring some unforeseen circumstances where the market opens down 10 or 12%. It's not a 0% chance, highly unlikely, but it's not zero. And I'm, fully invested or something. I happen to be at that time. So I apologize. I went on a lot longer on this than I expected, but the message is protecting downside is important too. It's in poker, if you have a bad hand, you don't want to throw good money after bad. It's if you're beat, you just fold. Protect what you have. Wait for another hand to come along. That's the message, really. So you can quote unquote beat the market in more than one way. All right. Let's get into the industry groups. I'm going to turn my camera off for a second here. Industry group rank. Computer hardware peripheral is number one. That's probably going to fall off after today. Let's see what Dell did. Dell was holding up a little better. Not terrible. Software database, building maintenance and services, building heavy construction. So, honestly, I think I'm going to speed through this really fast. I don't know what, in the very midst, the beginning-ish of a correction, the industry groups are not going to tell a great story because it could be some of the stuff coming off the highs. Give me a week or 2 or 5 or 10, and then I really want to know where the industry group strength is once the market stops making new lows along the way. So, but this should be part of your kind of weekend practice. Just make it a habit. All right, let's jump into the stocks. So NVIDIA obviously breaks the 50-day. If you have any kind of offensive, defensive sell signals, this would be a sell signal. You would lighten up, reduce, get out completely. I don't know how you would do it, but you would want to heed this message. It's off 21%. Risk happens fast. It's really, really kind of crazy how fast it happens. And you see you have this bad break. So this is your largest one-day down move. And, that's a bad break and it could never overcome that. And then you had kind of a medium-sized break, tries to rally, and you could see it's just kind of losing its steam to the upside. I tried this a number of days off I think it was here off the 10-week line. It went up for 2 days, and that was the best it could do. So it needs a base. It needs something, I guess. I've got this little trend line drawn. Honestly, if it did something like that, I probably would buy it just because it is NVIDIA. But it's not, it needs time at best. On a side note, I can tell you the reason I sold it, I had heard on Twitter, can't confirm it, but that Duquesne Capital, Druckenmiller, was at a dinner somewhere, like a private event, and he had said he had exited his Nvidia trade. I don't, I can't confirm that or anything, but just the fact that it was out there was enough for me. I'm more of a shoot first, ask questions later. And so who knows if that contributed to the kind of the mindset of all the traders out there. But this looks like it needs time. SMCI, this looks broken. Looks much worse to me than Tesla. Like this would be off my radar. On to the next one. CrowdStrike. So falls in the category of leadership. I'd be interested in there. I've got this little trend line drawn just in case, but it's just too early. There's nothing there. Probably needs some kind of shakeout. But the group, some of the other names like Zscaler, gosh, it's literally below the 200 day. So, it's down 35% off the highs. Palo Alto, 27%, not a great base, just a total void for at this point. Let's look at the Bitcoin proxy. So MicroStrategy, what is that? 40%. It looks like nothing. 40% off the highs. So it literally needs to double to get back to where it was. The math is pretty cruel. And then coin, I did look at that earlier. Not quite as bad, but the speculation in that area seems to have lost its umph. Tesla, that's the one stock I am short, and it just can't get out of its own way. You've got earnings in a few days. We'll wait and see. Maybe it's a sell the rumor, buy the news on the earnings. We'll have to wait and see. But gosh, the stock sure doesn't it doesn't have any umph. Like it's gone nothing but down in the whole bull market rally. Yeah, it can't get above this 10-week line. And monthly, it's like you think, oh, it's 150 where it's already in half, Scott. Well, it's made one of the great stock market moves ever. I mean, if it came back to the top of this base, I'm not saying it's going to, that's 25. It came back to the top of the COVID bull market high at 60. If it just tested the lows, that's 100. So it's not where they've been, it's where they're going. And this at this very moment is super weak. What else is out there? Meta is probably one of the better stocks. So it finally broke the 50-day, but not that dramatically. Trying to hold up. I don't know. I think if you have to own something, this is probably something you can own. But a nice thing is I don't have to own something. Micron, really good report. Everybody loved it. Now it's rolling over. How about AMD? I mean, quietly, can I say that? Down 35%. It's been one of these markets where if you don't have sell rules, you're probably going to lament that you don't have them. It's so difficult to sell into this kind of move that looks it looks like, oh, this stock's just getting going, Scott. Well, it's already made a big move. It's 70 to 180. And then when they break out of these kind of mini bases, they can last. And this one did. I mean, if you bought 185, it went to 227. But if you're buying them out of mini bases, you really need to have some kind of sell roll. And this reversal top and how about the fact that like where this is the day that Nvidia reversed as well. And Nvidia at least did that before it did that. AMD couldn't do any of it. I've never quite understood the AMD move. Maybe somewhere along the line, things get better, but I've never owned it. I just don't, if things are so great, I mean, when are they going to turn the spigots on? The earnings and sales are just so pedestrian to me. So I've missed the AMD trade for sure. Amazon breaking the 50-day, very meta-like, one of the great names, holding up just fine. And Apple, relative strength of 25, pretty poor. I have a hard time being short Apple, even though I've wanted to, because it's just such a big, great company. You're probably better off just being short the Nasdaq and have just forget about it. But this is not acting all great. It's definitely not something you want to own, I would think, based on our style. What else is out there that I want to talk about? So, is there anything to own? Well, sort of. Like Wheaton Precious Metals is holding up really well. TNK, yeah, it's okay, not too bad. TNP, yeah, not that exciting. Tech, how about Tech? TECK, it's fine, but problem in a bear market, if this turns out to be one, is eventually they get them all. So you're holding something because it's holding up, and then they sell it. And you're like, oh, okay, I got to get out of XYZ. But ABC's acting so well, so you keep ABC. And then 5 days later, the selling comes around to ABC and you get out of that. And pretty soon you're 10% off the highs, and you were like, what did I do wrong? I thought I protected myself in this bear market. So sometimes it's best just to clean sweep room, start over, and you're going to be sorry on a couple of them, but you're sure going to be glad on a number of them if the market gets bad enough. So what else? I think gold stocks, I guess AEM. AEM. If you have that one, it's acting fine too. The relative strength line looks very good, but you have to wait and see. So it's kind of where we are in the market. It's I would guess, IBD's got the exposure at 0 to 20%. And I agree. I don't think you want to have any more exposure than that, because most of the time when you get this type of stuff, we're very oversold. Yeah, I will give that market credit. So when you get oversold like that, you tend to get some kind of bounce. But I don't know if that's from here or from here or from here. But we are pretty oversold. What's that? And Nasdaq's down 2, 4, 6 days in a row. It's unusual for it to be down that many days in a row. But it's so risky to be long it, if because most of the time you're right, is the idea is to be long for a bounce, but if you don't get that bounce, you could lose a lot in a hurry. So I think you're best, and then you have the weekend, and that probably contributed to the negativity and the weakness today. All right, so let's go to the quote of the week. At the moment of victory, tighten the straps of your helmet. I couldn't figure out who actually said this. Probably nobody knows who said it for real, but it's a Japanese samurai proverb. And the idea is, when things are going really well, buckle up, prepare yourself. And it's very much so in the market. When things are, I always get nervous when things are going too well. I don't know why, but I'm just afraid that it's just when things are too good, it tends to be the end of the move. So it's been a pretty good run. Nvidia, Uber, ServiceNow, the Bitcoin stocks. What else? The peripherals, SMCI. And so it just seemed like when things are that good, you need to prepare yourself for the change. And I had I think I probably mentioned this in the video before. A lot of times when the things are going really well for me, I start looking for a beach house in Hawaii and so a lake house in Maine, and I just craziness. And that's always, always, always right near the end of the move. I spent a gob sum of money on a brand new car in April 2000. I mean, it couldn't have been more near the top of the market when I did that. It's just typical of how the market works. So at the moment of victory, when your things are going well, prepare yourself. It's not always going to be the case. Just have a plan. What happens to a lot of people is they think they have a plan. Maybe they do have a plan, but when it's time to execute the plan, they freeze. I don't want to sell Nvidia. I wish I had sold it on the way up. And so I have a plan. I sell them on the way up, and I'm okay. If they keep going up without me, that's fine. That's fine. It happens. I showed you that 2019 performance. It's a very frustrating year for me because a lot of my colleagues were doing really, really well because the market kept going up and they just were sitting. And I was taking profits and I underperformed. And it's frustrating. I get it. But the next year, it saved me. And then in 2022, it really protected me to have that type of a strategy. So have a plan, develop it based on your personality. A lot of why I do this is just because I found I just hated giving back unrealized gains. I just would rather sell them at 100 and watch them go to 120 than sell it at 100 after having been at 120. It's still 100, Scott. It shouldn't matter. Excuse me, but it did. It did. Psychologically, it was different for me knowing that the stock was 120 and I waited all the way to 100 to sell it versus selling it at 100 and just watching it go to 120. I don't know, but that's kind of how I morphed into this strategy. Now, I don't sell all of them on the way up. I try to keep some of them, very, very few of them. Once in a while, if I think I have something special, I try to keep that. And then if I give that back, I say, that's okay. That was my plan. My plan with XYZ was to try to keep that one, to allow it to maybe be turn out to be super special, big winner. And it's not going to always happen that way. So, all right. Contact 800-831-2525, market surge at investors.com. Have a great weekend, everybody. We should be back next week. Bye, everyone.